Where are we going this morning? Well, float and Excel and cash flow forecasting has been a bit of a hot topic over the last, since COVID-19 kicked off. It's certainly increased the relevance of it. And about 2 weeks ago, I was speaking to one of my full mastermind members, and they suggested that I spoke to Jen at Float and had another conversation with them around how it's developed and how it's worked and how it's helping her in her accountancy practice. So I touched base with Jen, and that's how this conversation has happened this morning. And as I said earlier, if you was here, we had 78 people register for the seminar or for the online conversation this morning. So it's obviously a hot topic. And of those people that have registered, of those people that disclosed their software or the software that they're currently using, 95% of the people on the meeting are still using Excel. So the opportunity this morning is for us to see how Float works, to see whether we believe it's better than Float, to challenge Jen on why she believes it's better than Float and how it works. So I have a number of questions that have been already preloaded into the system, which I will be asking as we go along. As I always say on these sort of things, if you're in the meeting and you have a question, your question will take priority over the people that have asked before the meeting. So please either ask the questions in the chat box, or for me, it's easier to administer if you answer them in the Q&A box. So if you look at the bottom of your screen, on your webinar screen, you should have a little box. It's got two little voice boxes with a Q&A above it, or you've got the chat one next to the share screen one. So just press the chat box, open it up, put the question in there, and at a convenient moment, I will ask Jen the questions that you've got. And obviously be free to challenge Jen as much or as little as you want in order to get the information that you want. Jen is open to those questions and is more than happy to answer them and provide you with the information that you want. And then the last thing, this morning there is no fire alarm planned, so if the fire alarm goes off, yes, you really have got to go and stand outside. So without further ado, if I could ask Jen to undo a video or turn a video on and open up the mic. Thank you very much, Kim. Brilliant. Thank you for that first question. I'm sure we'll get there in a minute. And say welcome to Jen. As I say, I've had a number of conversations with Jen, been very impressed with what Float have done. Just as a disclaimer, Greenstones are not currently using Float, but we are considering using Float. So this will be as much of a learning experience for me as for what it is for everybody else. I've got a couple of people that have raised hands, Tony and Susan. If you want to share, if you can either put it in the chat and then I'll come back to you, Tony or Susan, or if you want to put it in the Q&A, then I'll do that as well. If you want to ask a question, then obviously the Q&A is the right place. If it's a technical thing, Tony or Susan, if you WhatsApp me, definitely Tony, because you've got my details. Susan, I don't know whether you have, but anyway, if you message me, if I can help whilst Jen is talking, then I will gladly do that. If it's oh no. Disable talking. Sorry, that was me pressing the wrong button, Susan. Yeah, see, it's there we go. Press the right. So we'll edit that bit out later, Jen. Just nobody's watching, so I'm sure we'll be all right. So without further ado, I will hand you over to Jen in order to share Float and how it is better than Excel.
Awesome. Thanks so much for that, Simon. And thanks everyone for joining this morning. Really looking forward to taking you through Float and hearing all your questions and hopefully being able to answer them as well. All right, I'm just going to go ahead and share my screen, everyone. So hopefully this will all work all right. Hopefully everyone can see that okay.
Yes, we can see it.
Brilliant. Thanks, Simon. Okay, so what I'm going to do is just take you through a few slides to start with, and then we'll get into Float as quickly as possible, show you around Float, and then, yeah, welcome any questions as we go. I thought, first of all, it might be worth just a really short introduction from me. So I'm the CEO at Float. I joined Float about 18 months ago. My background is that I'm an accountant. I qualified, 15 years ago maybe. I left practice quite quickly after qualifying, actually, and I've worked in sort of various finance roles throughout my time before joining Float. All right, so let's kick in. what we're doing here. So float, what is float? I don't know if any of you will have seen float before, so I'm looking forward to showing you if you haven't. Float is really about trying to, it's a sort of very visual operational tool. So it's about operational cash flow management and cash flow forecasting to help businesses make better decisions with more information to allow them to do that. So what problem do we solve? And let's just kick off straight away with Excel, and I guess where I see that we're doing a better job than what Excel can do. Full disclaimer, I love Excel. I'm an accountant, so I think that's probably along the lines of what most people feel. So Excel is a brilliant tool for a lot of different things, and I use Excel often. And actually, up until I joined Float, I'd used Excel for cash flow forecasting and every role that I'd been in as well. But I'm sure you've all felt the pain of how Excel can cause trouble when you're forecasting your cash as well. Some of the things that I used to find, things like getting your opening cash balance to match what's actually in the bank, and that would often be quite painful, just trying to make sure that you could get the correct opening balance and the sort of historical cash flow balances that are maybe downloading bank transactions and trying to get it into the format that you want. Other things is that it's immediately out of date. So often I would do cash flow forecasting on a Monday morning for previous businesses that I've been in. And by Monday afternoon, it's already out of date. Other invoices have been paid, customers have pushed invoices out, and various things that happen, as you know, all the time within a business. So it is immediately out of date as well. And the other thing from an accountant and client perspective is that it doesn't really allow for collaboration well. So one of the things that we'll come on to talk about is where I think Float can be really powerful is where the client is using it together with the accountant too. So often that we find with in Excel, you either have to lock it down really tightly so that the client can't make changes to the formulas, but then sometimes that can be too restrictive if they don't know how to use it properly. Or formulas get broken and you don't know that a client's gone in and added a row and you're not able to kind of keep track of it as well. So that can be quite painful too. And the other thing is around scenarios too. So having run various scenarios through using Excel as well, often it can be difficult if you make changes to one, trying to make sure it's flown through to the other two. So I guess these are just some of the pain points that I'd certainly felt when I was using Excel for cash flow forecasting before. And what I'd like to do is take you through where I feel like Float covers some of those pain points and is able to help you with some of those pain points as well, to make it a much better and efficient process for you. As you can see, it's a little snapshot of the sort of main graph, cash flow graph in Float. Everything's much more visual and much more representative of what you're able to see as well. So let's run through a couple of those things about where Float can help. It's being able to surface all of this information in one sort of snapshot. So this is our overview page, which we'll see when we come on to look at the demo. And what it's letting businesses see is immediately at a glance where their cash flow is headed over the next few months, where there's any low points, what actions they need to take over invoices or bills that are past expected dates, whether the bank still needs to be reconciled in zero and pushing them to go into zero as well. So it's that sort of at a glance snapshot. The other thing is that it's this very visual view of cash flow as well. One of the things that helps Float stand out from the competition, I believe, is that Float has been built with the business owner in mind rather than the accountant. And I believe that that's a good thing for accountants as well, because it means that as we've developed the product for business owners and taken lots of feedback from business owners over the years as we've developed the product, we've really come up with a product that business owners can understand, whether they're financial or not. So it's very intuitive, it's very easy to use, easy to understand, and therefore that, I believe, helps the client engage with it. And if the client's engaging with it, the accountant's going to get a better result out of that as well. The what if scenario modelling that we can do in Float is really powerful, and it's something that of all the features that we have over the last few months has really come into its own with everything that's going on in the current environment. So we've had lots of businesses and accountants that we've been working with that are trying to model out what if this happens. So particularly thinking about what if I can't open back up for 3 months? What if I can't open up back up for 6 months? Can I keep any of these staff on? What if I furlough this? What if I don't receive this grant until August? All of these things that you're able to scenario out really easily, and then really visually you're able to help a business owner understand exactly where their low points are, and then critically help them think about how they can overcome those. Because often I think that business owners can feel really overwhelmed with all these ifs and the questions, and actually if you can just help them visualize exactly what's happening, you can take some of the unknown out of it and then start to help them understand the ways that they're able to work through that as well. The other thing that we have in Float is being able to see all of your overdue bills and invoices at a glance, and able to update your expected dates. And really this is where the cash management side of things really comes into play with Float as well. So you're able to see if you have a conversation with a business owner and they say, oh, this big customer isn't going to be able to pay me next week now, they've just said they're not going to pay me for 3 weeks. Being able to go into Float, make that change and be able to see the impact of that flowing through to the cash flow, and then help them to make some of those other decisions around, what does that mean for my supplier invoices that I'm planning to pay? Can I still pay them as planned, or do I need to move them out? And really being able to help them manage that cash flow as well. And then the other point is around a bit more reporting of exploring budgets versus actuals. And I think this is really important for really engaging the client with what's going on in their business. And for me, the insights tab, which we'll hopefully have a chance to have a quick look at when we're going through Float, and being able to dig into this and help and sort of look at where what the client said they were going to do from a cash perspective, and then what actually happened. And then you can use those conversations that you're having with them to help set the forecast going forward as well. And that's when a lot of things can start, a lot of these conversations that can happen with your client, where you can start to, where they might mention, oh, well, they didn't pay me because I've now decided to do X, Y, or Z. And then you wouldn't have had that information if you hadn't had somewhere to go in to sort of create the space for that conversation to happen. So being able to go in, see what's already happened, and use that to inform where the forecast is headed as well. And then also just being able to dive into that sort of daily view as well of the business finances, seeing exactly those ups and downs. Because as we know, particularly at the moment, businesses are thinking about cash on a daily basis. There are ups and downs that are happening, where when are furlough payments going to be paid, when are grant payments going to be received, and being able to see exactly those points so they can manage them at that level is extremely important as well. Like I say, businesses are, we've been built around what businesses need, and you can see some of those reviews if you go into that marketplace, and that's just a little shout out for some of the awards that we've won as a product as well. All right, so I think I'm going to, unless there's any questions before we jump in, I'm keen to get into the demo. Simon, is there anything that you'd like to jump in at the moment?
No, I've got 3 questions, but I think if we have a look at the demo, and then
Sure.
I'll come back to those questions at the end.
Brilliant.
The questions at the moment, they're all focusing around why you are different to the others on the market.
Okay.
And there's quite a bit from my perspective when I listen to the industry. There's quite a bit of how much training is required for some of the other providers. So if as you go through, if you want to touch on that.
Sure.
And then for me, the important part, and this was brought up again yesterday, was it was a bit like when Xero first came on the market, lots of accountants said, well, we don't need Xero because we've got Sage, and Sage works perfectly okay. We don't need auto entry because we can process them quickly on Sage.
Yep.
And the customers drove the Xero, and they drove auto entry because they didn't know how it worked. And I think I'm slowly coming around to the idea that this is perhaps a customer-driven requirement rather than an accountant-driven requirement. And over time we might see that. But anyway, that's a personal view. So now, if you would, great on the demo. And then, as I say, if anybody's got any questions whilst the demo goes on, anything that needs clarifying, please do. And if not, then I'll come back. I've got Chris, Kim, and Jeff already, plus the ones that are already in the system. So I'll come back to those at the end, Jen, if I can.
That's brilliant. Yeah, thanks. Yeah, please do just interrupt me. I'll keep on talking, so just jump in if there's a question, if I don't pause for long enough for you to ask it, Simon. Thanks for that. Awesome. Okay, so let's jump into the demo then. So what we've got here is our partner page. So this is the page that you would see as an accountant that you would be able to view all of your clients on one page here. So we pull in some of the key information that you, oh, sorry, clicked a little bit too quickly here. Let me just jump back into that. It's typical when Zoom goes slowly when you don't want it to, and then goes quickly when you don't. Right, okay. So yeah, here we've got all of our our clients that we've got on the platform. And you can see it's pulling in some of that key information that we'll start to talk about as we dig into them as well. But importantly, from the sort of partner page, some of the things you can do here is you can manage staff and who can access which client. You can manage the users as well. So, you know, I've talked a little bit about trying to engage the client in Float, and I think a lot of the accountants that we have on board that are really getting the best out of Float and that are bringing all of their clients on are really engaging their clients with Float as well, and giving their clients access to Float and helping them be able to see where they can go in and make updates as well. So the accountant's really, rather than updating the cash flow, is really there to help provide advice, which is the bit that the business desperately needs as well. So this is our sort of at a glance view, like I say. So let's jump into one here. So we're going to jump into one of your clients. So this is then what the business owner would see here. So this is the overview page that I mentioned, and this is the sort of snapshot of what position is the business in at the moment. So there's a few things that it's sort of telling you here, that there's some invoice dates need to be updated, there's some cash flow, there's some items that need to be reconciled in Xero, snapshot of where the cash position is for the next few months, a little bit around sort of net cash movement over the last few months, and then letting you see how much you've still got to go in your budget for your sort of cash in and cash out for that month as well. So like I say, that's a bit of a snapshot, but let's jump in, and a lot of these terms will start to make sense as I start to run through exactly what how this works.
So just that's obviously imported that data into Xero. One of the questions is, does it import any budget figures that we've got in Xero into Float as well?
Okay, thanks for that, Simon. So the quick answer is no, because and the reason for that is so it pulls in from Xero all of your invoices, all of your bills, all of your bank transactions are all pulled in. It doesn't, we don't recommend that you pull in the budgets from Xero, and the reason for that is that the budget that you've got, your sort of overall budget in Xero, is obviously a P&L budget. There are so many differences between your P&L budget and your cash flow budget that we don't recommend that that's something that you do. There is actually a way to pull in your overall budget, and when we go into scenarios, you might be able to see a little bit of that in there as well, where you can pull in your sort of P&L budget from Xero. But like I say, it's not something that we would normally recommend, just because of the differences between those two budgets too.
Thank you, Jem.
Thanks. Okay, so let's just run through just quickly what some of these sort of key numbers mean, and that'll just help us build up a bit of an understanding how Float works. So we're talking here about the total reconciled balance in Xero. Now, the reason that we talk about the reconciled balance and why we're flagging when there's an amount to be reconciled is because Float's only pulling in the transactions once they've been reconciled in the bank. So until they've been reconciled in the bank, Float doesn't know where to put them. It's not aware of them, so it's only looking at sort of the balance that's sitting in Xero. So it's really important that your client, or if you're doing the bookkeeping, that you're keeping the bank sort of reconciled on a reasonably good basis in order for Float to be as accurate as it can be. And interestingly, one of the things that one of the accounting partners that we work with has said that this has been really good for driving her client to reconcile more. So she'd been really struggling to get her client to keep the reconciliation up to date because they never really saw any benefit in it. But then once they had Float, and when they really wanted the information out of Float, that was really driving the client back into Xero to make sure it was reconciled and up to date, so that they were getting the better information coming through Xero as well. So that's the reconciliation. And here, this is our sort of cash runway date. So you can see we've got our cash graph, and this is made up of all of those invoices, bills, and the budgets that we'll come on to talk about as well. This cash flow sort of runway, if we can change the amounts here. So if we said we wanted to know when we fall below £2,000, for instance, we'd put that amount in, and then it'll tell me on the 31st of July, that's the date we're going to run under that. Now, equally, if you had an overdraft, you could put your overdraft amount in there as well. And that's one of those key bits of information that flow through to your partner page, so that you're able to see at a glance when you're looking at all of your clients what their cash runway date is. And that might help you to think about which clients you need to maybe pick up the phone to have a chat with them if there's if their cash runway looks like they're going to run out in the next couple of months. So that can be a useful useful tool as well. And then it's also just, you're able to go in here and manage which bank accounts you're pulling through into Float as well. So what we'll do is we'll just come on and start talking a little bit more about the, first of all, about the graph. So you can see here, this is showing you your overall sort of net cash position each day that's flowing through here. And as you can see, you can change that depending on how you want to represent it, if you want to see it weekly or monthly as well. So that's, like I say, what the great thing about having that as a sort of daily position is being able to see where there are some key low points and whether you might need to think about timing of spend or managing temporary overdrafts or whatever that might be in order to be able to avoid any of those low points that are in there. Great. So what I'm going to do is come on to talk a little bit about how we populate this graph and how we're sort of getting the numbers that are in there. So you can see here we've got the sort of historical amounts in here. So this is what's making up your historical information and what's in your graph. And you can see if we jump into here, we can see that it's pulling through all of the invoices that are already that are in Xero. And you can click into them and you're able to see quite a lot of detailed information as well, sort of line information that's pulling in from Xero for all of your actuals that have come through. And then what we do is, so we've got our invoices and we've got our bills and we've got our bank transactions. So that's going to populate all of any open invoices and bills are going to be showing as forecasts over the next few months, depending on what their expected dates are as well. And then the other missing piece of the puzzle is being able to create budgets essentially for what you expect to happen over the next few months. So you can see if I go into here for April, I've got a sales budget. I've got an amount in here, and we're able to make that as in sort of various different ways how we might want to build up that budget to create what we expect to happen over the next few months. And we can create that using a number of different ways. So it might just be one total amount, or it might be a few different expectations that you have. Really easy to create. So if I just jumped in here to create a budget, so if this is advertising, I might add a LinkedIn one. I might say this is something that's going to be a weekly budget. And it's something that I'm going to do. It's a 6-month LinkedIn campaign that I'm going to have, and I'm going to spend £250 a week, and I'm going to go in and create this budget. So what that's going to do is that's going to automatically create that budget and push that through, and it's going to update all of your cash flow projections on the back of that as well in here. So you can see now this is going in date order. So you can see now this has created this LinkedIn budget. And if I wanted to go in and make a change because actually I'm going to kick it off with a bigger amount because I've got a sort of kickstart to this campaign, you can go in and make changes like that as well, or you can delete them, or you can make as many changes as you like, or you can make a bit more of a sort of overall change if that's the other way that you would like to do it. So being able to sort of work with your client to build up some of those. The other thing we might want to do if there was hey Simon.
Okay, I've got a couple of questions. I
Sure,
think you've just answered them, but I just want to check in.
Mm-hmm.
So those numbers,
Mm-hmm.
the historic ones come from Xero.
Yes.
And then if we want to populate the numbers going forward, just the same as we would do on an Excel spreadsheet, basically, we have to go in and enter those numbers.
Mm-hmm.
But instead of us cutting and pasting and all the rest of it, putting in the formulas, Float will do all of that for us.
Mm-hmm.
Yep.
Mm-hmm.
So I believe, Yarka, that answers your question about manually entering income and expenses. So just to confirm, if there was some income that we believe that we're going to get in November 2020,
mm-hmm.
we could go into the November 2020 box and put in what we believe the income is going to be when it's received in November.
Yeah, exactly. Yeah.
Perfect. So I think that answers your question, Yarka. If it doesn't, then re-ask it. And that also, so from a Paul's perspective, Yarka's just said, yes, thank you very much. From a Paul perspective, he would then be putting the budgets in two places. He'd be putting them once in Xero and once in Float. Or not necessarily Paul, but one of his team members would be putting it in Xero and in Float. Is that right?
Yeah, I guess that is right. And I think it's an interesting challenge. And you know, I obviously manage Float as well. So I'm doing the same thing for us. For me, when I'm creating the budget in Xero, I create a budget and I don't tend to go in and keep that up to date. I sort of set my budget for the next year, and then I might go in and do a reforecast halfway through the year. But generally, I'll sort of set that budget, and that will sit over there. Float isn't really a sort of set and leave product. It really is about managing your cash and keeping it up to date and keeping your budgets up to date. So you might do that initial get the budget in, and there are a few other ways that you can do it. We do have a sort of spreadsheet input, which allows you to do a little bit more of a cut and paste and sort of get the initial budget in. But what we're really trying to do is encourage users to go in and make changes when they know something different is going to happen, because that's when it really becomes much more of an operational cash flow tool rather than a long-term create a 3-year business plan forecast and then set it and then leave it and never touch it again, which is not what Float's trying to do.
Okay, and just while we're on that then, what do you find most accountants do? Do you find that most accountants set it up and then they let their customers go in and change it? Or do the customers email them and say, I'm not doing the Facebook or the LinkedIn campaign now, can you take it? How does that, how do you find that works?
Yeah, it really is at its best is when the client is engaging with it. So what we're finding, and you know, we're seeing this a lot at the moment happening at scale when people are bringing on a lot of their clients at once. What we're finding is that accountants are going in and sort of doing almost, and we're supporting them with this, obviously doing a sort of training session with their clients. So doing that initial sort of, this is what Float is, this is how it works, this is how you go in and set budgets. But the accountant, you know, with the best will in the world, doesn't know what's going on in the business in the same way that the business owner does. So really what we're trying to do is find a place where the business owner can find it really easy to go in and say, this is what I'm doing. So what we're finding is it's a kind of mixture to start with, where the accountant's helping them get set up, the client's then engaging with it. And then this becomes part of that monthly routine that you have with your client. If you're sort of set up on a sort of doing monthly management accounts, the cash flow review, the review of Float becomes part of that sort of ongoing process where the client's keeping it as up to date as they can. The accountant can come in and review it with them, maybe see where, oh, that doesn't look quite right, or have you thought about this, you know, and been able to sort of create and sort of help. It's almost been able to, it's that sort of advisory side of it rather than the doing. So the client's doing a bit more of the keeping it up to date. So that's where I believe it works. It works at its best. It's not going to be perfect for all clients, but that's probably where it works the best.
Brilliant, thank you. And this is what I love about these conversations, because and the questions are starting to flow through there.
Brilliant.
It's this sort of stuff that you don't get in a normal demo. So
yeah, of course.
Just this might be a bit how long is a piece of string, but how long do you think it takes on average to set a fairly simple business up on Float?
From scratch, from somebody that's never seen it before, you could have it done easily within an hour. I think, you know, if I was setting up a client and I'm, you know, familiar with Float and I know what I'm doing, you know, you could have it done in sort of 40 minutes. That first go at cash flow, you could have it done in about 40 minutes.
Brilliant, thank you. Just to answer Susan before she goes, yes, Susan, there is a recording. It says it's recording, so I'll email that out to you once it's all been sorted. Paul has asked, so what happens when you put an amount into a budget as cash coming in, and then the invoice is raised and the cash is received before you expected it to be received? So would that income be in Float twice?
That's a great question. I guess, well, if it was all within the same month, it's fine. So the way that budgets work, which I maybe haven't explained yet, is that budgets kind of work like they're almost like a container. So you create a budget for, let's say, £20,000, and then as invoices come in and are paid or are due to be paid, they almost fill that budget up. So there's not a sort of double counting when you've got an invoice and a budget as well. So the invoices sort of fill the budget up. So you can see here, we've got 8,294 of actuals out of your 20,000 budget. And if another invoice comes in, that's just going to keep filling that up. So your budget is creating an expectation of what you expect based on the invoices that are in and also invoices that you haven't received up until now. So there shouldn't be any double counting from that perspective.
But there is a mental process. So say, for example, in November 20, I expected to get a one-off invoice of 20 grand, and that money was received in September, and therefore that topped the budget up. So I hit the budget for September. I would mentally have to go forward to November to reduce that or remove that 20.
You would, yeah, but I would expect that your September budget would you'd end up being way over your September budget because you'd received a chunk of money that you weren't expecting to get. So that would be your trigger to think, why am I over budget? Oh, it's because of this number it's this amount that I've got budgeted in November. So that's what would maybe sort of trigger you to go and look
that's why I love these conversations, because it provokes. It's like, so you can automate so far but
Yeah.
you still, in order to be connected with the numbers, still be conscious of the numbers, you still have, there
Yeah.
still has to be an element of manual process. Otherwise it just churns out a report that's useless
There
to.
has to be, we need humans. We need humans in amongst all of this as well, to be thinking about it, and to know, to have had the humans had the conversation and knows what's going to be happening. So yeah, we absolutely do need human intervention in this as well.
Brilliant, thank you. John Bate, I've got your question. I think we've just answered it as part of the poll question. If not, if you could pop it in the Q&A box, I'll come back to it in a minute. And then the last one before I let you move on,
No worries.
Jen. So when we set up initially,
Mm-hmm.
we're right in saying that you can upload from Excel. So if you've got a cash flow forecast on Excel, you can import it on that spreadsheet import button, and that will set it up.
So no, as a quick answer to that is there's not an import. It is an input rather than import. If I just quickly open this up, it's basically a cut and paste. So
Right.
it's not a sort of upload, but you can go in, and this works exactly like a spreadsheet, and you can go in and sort of cut and paste it rather than.
So when you say cut and paste, am I cutting it from Excel and pasting it into,
Yeah.
or am I manually going in and entering those 20?
No, you're literally cutting and pasting.
All
Yeah,
right,
yeah, copy and paste. Maybe that's a better way to say it. Yeah.
brilliant, thank you.
No
And John has just said that I've answered his question. And then the last one, then, just so from Yarka, what business size do you have on the board? How big a businesses do you look after? Is it any? Do you feel as though you've got a limit?
No, well, I guess that's a good question. I guess so we're limited to the type of businesses that are using Xero, QBO, free agents. So I guess that there's a limit within that. They're the 3 platforms that we integrate with. And I guess I guess other than that, there's not really a limitation. We find that most of our businesses are probably in the up to, I don't know, maybe up to 50, 100 employees type style. But I would say that it really depends on what tools they're using. I think if somebody's using Xero and they're using that sort of the app ecosystem, then Float would fit really well with that.
Okay, perfect. And then just to tee you up, because there's some
Sure.
questions on how it handles VAT, and there were several questions on at the beginning. So if you carry on with the demo, Jane, if there's a point where you can talk about VAT and how that works, then
Awesome.
that would be great.
Yep. Of course. Yeah. Thank you for that. Yeah, we'll get onto VAT just shortly then, because I think that's certainly one worth chatting about. Thanks. Okay, so I think I've kind of talked a little bit about how we're creating these budgets, and hopefully that all makes sense. Just one other thing that might be worth mentioning. So if we go into motor vehicle expenses, for instance, to create a budget here, let's just say this is for car expenses, and this is going out here. The other thing that we have here is being able to use, with a lot of the sort of smaller costs in particular, that you might just want to be picking up sort of the last few months average. So there are different options in here when you're creating your budget. So you might just say that you want to use the last 3 months average and use that going forward, and that might work really well for something like telephone or printing and stationery, those kind of costs where there's a little bit less thought required. Some of the other options that you have in amongst here as well that might be worth just mentioning, you could have an increasing value or decreasing value budget as well. So if you wanted to say, if it was an expense that you were expecting to be going up, you could set an amount, and then you could either have an amount or a percentage increase that sort of sets that up as well. So just worth sort of mentioning some of those things as well. So I'll set this budget sort of going forward as a fixed value. And then there's just one other thing I wanted to show you, and then we'll come on to, we'll have a quick chat about that as well. I'm sure we'll get a good conversation. So the other thing I just wanted to mention that can be quite helpful when you're looking at the budget, and certainly when one of the things that I do that I always loved about Excel was being able to format it in the way that I wanted and get it into the right order that I wanted. So thankfully in Float we can do that too. So if we go into manage table layout here, you can see that we've got all of our accounts in here, and we can move them about really easily. But the other thing that we can also do is create groups. So if I was to create a group called, let's just call that people costs, and let's say it's a cash out group, and we'll add that there. Now people might be my number one cost, so I want to have that sitting as my top expense. And then what you can do is you can start to add items to that as well. So I'm going to add wages and salaries to people costs, and I'm also going to add employee taxes to people costs. So I'm going to put them in here. Oh, did that one go in there? I don't think it did. There we go. So I'm going to put them in there, and you can see when we go back to the cash flow table, we've now created a group here that we can expand to see what's underneath there, but we can also roll that up as well. So it's worth spending a little bit of time getting setting up the cash flow in the table in the way that you'd want to be able to see it, and it just makes reviewing that cash flow a little bit easier when you're seeing things sort of grouped together, and it just makes it a little bit more presentable for the client as well. So just worth mentioning that. So VAT, let's chat about that too. So as you know, when we're looking at cash flow, all of the amounts that are coming through here are all going to be are all gross. So all the transactions that are coming through are showing the sales are going to be showing the amount, including VAT coming through. So one of the questions that I think had come through yesterday was, do we automatically calculate the VAT? And the answer is no, we don't. And it's an interesting one because I've spoken to many accountants about this, and actually one of the things, and it's as the product team at Float as well, we've talked about this extensively too. It's an interesting one because what we found is that everybody's got a slightly different way that they would want us to do it if we were to do it. Some people thinking about, would you just want a percentage of sales, or would you want to be, so we've got to think about cash basis versus accruals basis, and lots of other bits and pieces that are in there as well. So what I thought I would do is tell you how I do it, how I forecast their VAT, and then and hopefully that might be helpful. And certainly what I've found when I'm speaking to other accountants and to business owners as well is what they've found helpful as well. So what I would tend to do is I would create a budget for what I expect my VAT to be. So usually my VAT will stay I'll have an expectation of where it's roughly going to be based on what's happened, or based on what, if it's sort of usually around, if it's around 14 or 15 or 16k or whatever that might be each quarter, and have that and set that expectation up. And what that allows you to do is set that expectation up sort of going forward quarterly, so you know what it is. And then what I do is, as soon as I've run our VAT return and I have an actual amount, I'll go in and update the next quarter's one for what the exact amount is. So what that means is that on a longer term basis, I've got a rough amount in for my VAT, and it might be a little bit out, but if it's a little bit out in 6 months' time, I'm less worried about it. But what it means is that the next VAT return that's due in 6 weeks' time, I've got an exact amount that's sitting in for that, so that I'm able to budget in that sort of shorter term for what the exact VAT amount is. And so that's really that's really how I would sort of manage the VAT from that perspective. But yeah, I'm sure there'll be questions, so I'm keen to hear them if there are on the back of that.
Yeah, so just on that, I think that answers your question, Bob. If not, then can you just put a specific question in there? I believe I'll run down the list of questions from yesterday whilst you carry on, Jen, and just make sure, but I believe that covers them all off. Okay. Just a very quick one. Somebody's noticed that when you was doing the budgets, it was a dollar sign as opposed to a pound sign.
That's just because I've gone into our dollar demo account. We've got different demo accounts set up for different companies, and that was the one that I was setting up last night and didn't think about what currency I was using. So apologies for that. Obviously, not at all.
That's why I love these.
I know. We're Float works in whatever base currency your zero set up in, so it'll pull in that currency.
Brilliant. Thank you. I'll disappear again.
Okay, awesome. Thank you for that. So the other thing that I'd just like to quickly show you is scenarios. So I've talked a little bit about these as well. So we'll go in and add a scenario. So let's say this is, we'll call it a lost customer sale. And what we're doing here is we're saying that it's on the stacking a new layer on top of the base. So we're going to go in and add that. So the way that scenarios work in Float is they're essentially what if that happens either plus or minus the base scenario that's sitting in Float. Not sure why this is taking a couple of seconds to do, but we'll bear with it. There we go. So we're sitting within this scenario at the moment, and you can see that at the moment it just is sitting exactly the same as the base, but now we can start to plan some what ifs. So if we go in here, and unfortunately I destroyed this business a little bit when I set some extra budgets up there when I was showing you how to create budgets, so I must go in and fix that too. So let's go in and create something in here. So we could go in and create a budget, and then let's call this lost customer, and this was a customer that we thought was going to be, they were bringing in 4,000 a month. So I'm going to reduce the budget by 4,000 every month. I'm wondering if my internet's going slower because the kids have now decided to go on every device in the house, which may well be the case. But we'll bear with it anyway. I don't know if everyone else is finding the same at the moment, but it seems to be an internet challenge at home. All right, so we can see here we've now added this budget, and you can see immediately then the impact of what happens then when that if that was to happen. And you can see, I don't know if you can see there, that's a slightly different color. So when you're adding the scenarios, it sort of it lets you see the where you've made any changes. And what you might do is, okay, in that scenario, if we lost that customer, we would stop doing our Google because we can't afford it. So we would go in here and we would ignore all of these budgets. So under this scenario, we're no longer going to spend that money on Google advertising either, because we just can't afford to do that. And you can go in and you can build up your scenario to be either as simple or as complex as you would like. And that starts to, so you can start to see, okay, so that's saving me a little bit now, but I still need to find some other cost savings. So there's no way I'm going to spend that money on that new laptop, and that's going to have to wait. So you can go in and ignore it. I'm going to leave the one in July because I think I'm hopefully going to still be able to do that, and you can save that. And like I say, it's just really about being able to build them up, and you can build up a number of different scenarios that will let you see the impact of different things. So what we've been finding, as you can imagine at the moment, are scenarios around, like I said at the start, what would happen if the shop stayed open, and what didn't open until July, or what if we were able to open again in May, or what if we did home deliveries, and what would that look like? And just being able to help make some of those decisions and help see at a glance what that means as well. Hopefully that all makes sense. So I'm conscious of time, so I'm just going to very quickly jump onto the Insights tab and mention that report that I'd said. So the budget variance report, if we just jump onto here. So, obviously I love flow and I love it being really visual, but I'm an accountant and still love a table of numbers if I can see them. So this is letting us see at a glance sort of, and this is where I would expect that this is a conversation starter that you're having with your client to see, we expected this to happen, this is what actually happened, why was there a difference? And then if you click into here, you can start to build up a bit more of a picture of exactly what happened. So in here, you're able to see everything that you expect to happen. You'll be able to see your budget. So if your budget was done at a granular level, like Twitter or advertising or various things like that, you'd be able to see it at a glance and be able to see where the differences are. And then crucially, what that lets you do is help your clients set budgets going forward as well. So you can have a conversation and say, well, you were way under budget there. Is this budget realistic now for me? Should we be bringing that down? What's the impact if we bring that down? What does that look like on the cash flow? And you can go in and do that for, you can look at any of the items at that sort of level as well. So you could jump in and see, can see here all these sort of budgets that are set up for advertising, and sort of starting off all of those conversations that you can have with your clients as well, that you're able to do. The invoices due and bills to pay that I kind of briefly mentioned, I won't go through this in too much detail, but essentially this is where you're able to go in and manage these expected payment dates, both for cash in and for cash out as well. So if I just had a conversation with City Limousines and they've said, we're really sorry, but all of these invoices, we're now not going to be able to pay them until the end of May, you can go in here and update that and say that's going to be the end of May, apply that date, and then that's just going to push that sort of all the way through float as well. It's a one-way sync. We don't push any information back into Xero. It's all just so you're able to sort of really play around with your expected payment dates and float to be able to see what the impact of those things are.
So Jen, just because I hadn't seen that before, so could you, is there a list of debtors in float?
Yeah.
Syncs with Xero. So could I potentially use it as a bit of a debtor management system as well?
Yeah, you could. The only thing we don't have at the moment, which interested to on what feedback is, but the one thing we don't have at the moment is being able to add notes in. But absolutely, so this is where you're able to go in and see all of the invoices that are due. You can also go in and you can exclude invoices if there's something in dispute and you don't want it to be expected in there. The other thing you could do, you can go in and set up sort of scheduled payment, sort of split payments. So you can set it up so you can say actually they've agreed they're going to pay in sort of installments, if you like. So you can set those up too. So you're able to sort of set all of that up within Float too. But yes, it's showing you your full list of all of your sales invoices and your purchase invoices as well.
Okay, and if you change the due date in Xero as a consequence of a conversation, does that flow through into Float?
It does, yeah.
So does that do it at midnight? Do you have to manually sync it? How does that work?
That's a good point. I didn't mention that at the start. So the way that we work is we synchronize Float every 24 hours automatically, but you can also manually sync at any point as well. So if you came into Float and saw you had a bunch of reconciliation to do, or you wanted to go in and update a bunch of things, you could go into Xero, do all of that, and then just come in and click that button, and then it synchronizes, takes a couple of minutes, and it'll just refresh all the data. With expected payment dates, it basically uses the most up-to-date version of the date, if that makes sense. So if you update it in Float, it'll use that number. If you then go in and update it in Xero the next day, when it then synchronizes, it'll use the most it'll update it to the date that's in Xero. And so if you're using something like Chaser that's pushing those dates through to Xero, that's then going to be pulled into Float as well.
Brilliant. And it's the same for QuickBooks?
Yes. Yeah.
Yeah, brilliant. Excellent.
Yeah.
Thank you. Have you got some more demo to do? Because
I think I'm conscious of time. I think I'm hopefully all done.
You're done. Perfect. Right. So I'll start asking the question. If anybody's got any more questions, I've got lots in various different places, but if you've got any more questions, you fire them in the Q&A box. That would be great. And I'll start firing them at you, Jen, and away you go. So
awesome.
Bob has asked, how does it work with regards to interest rates? Can it automatically calculate bank interest received, or more importantly, if we're focusing on cash flow forecasts, bank interest charges, or if they go over the overdraft limits, or is that a manual process similar to the VAT one?
Yeah, unfortunately, that sounds like that would be a manual process. There's no sort of way to calculate an interest rate at the moment. It doesn't there's not like any link of an interest rate to another balance or anything like that. We don't have that.
Okay. And then John has asked, how would Jen recommend dealing with clients that use invoice financing?
That's a good question. So we do cope with invoice finance, and it really depends how it's been set up in Xero, whether it's been set up through sort of a clearing account, or so sometimes they're set up as sort of bank accounts as well. So really depends on the individual setup, but generally it is possible to have Float work with invoice financing, depending on how the Xero's been set up as well.
Brilliant, thank you. And then Jeff, in case I missed anything regarding this, does Float automate the forecast at all? And what I mean by this is, does Float look at the historic transactions, income or expenses, and then make assumptions from the historic info for the future? Or is the forecast solely dependent on your manual input setting the budgets? So that was where you showed the little button where you could do the average for the last,
Yeah, so that's the most that we do is help with the sort of historical. Sorry, I think my 6-year-old's knocking on the door. I hope that she'll go away. What we do is we show we're able to help you with the sort of the historical average. We don't do any other kind of any other sort of hints towards what your budget would be other than that.
No, so it wouldn't go back and say you paid your insurance last May, so you should be paying your insurance this May.
No, it doesn't do that.
Okay, thank you. Is there a way to export all budgets inside a cash flow to show what is live or ignored?
Oh, that's a good question. So we do. I didn't talk about exporting to Excel, but you can export the sort of cash flow table to CSV. So you can sort of do it from that perspective, which is the whole thing. But within a budget, no, you wouldn't be able to. You can't export it at that level. And one of the things around that is really because we really trying to encourage people to use the system live. To stay in Float, and because as soon as it is exported, it's out of date again. So really trying to keep people in the app.
Yeah, so then that was one of the questions on the registration form was, can you export into Excel? Mm-hmm. So in my layman's terms, the answer to that is yes, but not sure why you would want to.
Yeah,
the simple answer. Brilliant, thank you. Can you link your accounts, e.g. if we drop sales by 4K cost of sales, does it go down 2K, or do you have to adjust the individual lines? So if I put that into my language, if we reduce sales by 4K, does it automatically flow through onto the purchases, or are they all manual adjustments like that going forward?
They're different, but it's a great point. It's one of the things the product team are looking at just now is those relational budgets. So when one budget impacts another one, So it's something the team are thinking about at the moment, but no, the answer at the moment is no. If you were to bring your sales down, you're going to have to go in and take your purchases down as well.
Brilliant. Okay. I've got and this is probably a good time to look at it now. Can you just cover off the multi-users and the whole firm? So I've got a couple about pricing and just how that works in simple terms. Am I right in saying, Jen, that the practice, when you become a partner, the practice gets a free version to use with the practice?
That's right, exactly.
Yeah. And then how does it work if we want to give it to our customers as well? How does that work?
Sure. So essentially what we do is we have our sort of partner program where you can essentially buy a bundle of licenses that you're able to then use for clients, for your business clients. So like you say, you get a free license for your firm, which you get anyway, regardless of if you've got any clients on or not. So, you know, if you're thinking about your own firms at the moment, jump onto Float and give it a go for your own firm. And then it really, the pricing is tiered. So the price per client will come down the more clients you bring on. So if you think about our first package, which is the bronze one for 10 clients, it's $145 a month. So it's £14.50 per client. And if you compare that to, I think it's £44 when a direct business comes straight to us. So there's quite a big discount there. And then as you go up the plans, the price per client comes down as well.
So just on that first one, just so I've got clarity, if a customer comes to you direct, it's £44.
Yeah.
And if we're on the basic package, bronze, did you say it was?
Yeah.
How much was that per?
It's £14.50.
£14.50. So there's effectively 30 quid margin in that if we wanted to recharge for the software. And am I right in saying from a conversation that we had that at the moment there's some discount, or there's a
yeah, so we've got an extended free trial, which I guess, you know, we've been running this for, gosh, it was started in March, I suppose. So the extended free trials are running until the end of May. And what we're having, so that's basically you can come on and add as many clients as you like and try it out, and you won't be charged until June. And if anyone out there is already a Float customer, they can upgrade to their next plan as well. So if they've got maybe 1 or 2 clients on Float, but they'd like to try it out for more, if they get in touch with us, they can also upgrade it to the next plan just now for free too.
So when you say June, is that June the 30th or May the 31st, just to be?
I guess, so it would be the month after. So it would be, I imagine it's June the 30th actually, but it'll depend on what date you sign up, I suppose.
Oh, okay, brilliant. So what I'll do is if anybody wants to carry on the conversation with Jen afterwards, Jen, am I fair in saying that you're not the right person to have the conversations with?
Yes.
But Jen will manage those conversations on the basis of mine and Jen's relationship, and Jen being the CEO, blah blah blah, whatever.
I know, whatever. Yeah.
Of Float.
Get in touch.
Yeah. Then I wanted to have this conversation because it's a real life example rather than a salesman trying to tell you how it actually or how he thinks it works. This is how it physically works within Float. So Jen's my relationship. So in the chat box, I've put Jen's email address. So if you would like to continue the conversation, email Jen, and then Jen will send you in the right direction to have what should I say? A smoother onboarding process. Can I be as polite as that? But anyway, Jen's details are in the box, in the chat box, so you can make contact. We now have 6 minutes. So Stephen, I believe I've answered that question. Does the software have any notifications by email?
Oh, that's a good question.
Yeah, say when the cash flow hits a certain level, goes below a certain level, is there any sort of notifications? And I suppose if we expand on that, if the customer's looking after the cash flow, can the accountant be emailed if it's showing they're going over the overdraft limit?
So we don't do notifications at the moment. Actually, there is we do send out a weekly email just with a sort of overview of what the cash position is and what's sort of sitting as sort of to be actioned as well. But we don't do weekly emails or sort of notifications actually at the moment. But it's an interesting concept for sure.
Brilliant, thank you. Then can you just, on the VAT again, can you just recap on that? Or if I recap it into my accountant's language, and then you can tell me whether I've got it right or not. What I believe you said is that you VAT payments need to be put in manually for each quarter.
Mm-hmm.
And the way you do that yourself is that you have a good idea of what the VAT liability will be, whether it will be 10 grand, 30 grand or 50 grand, and you drop that number in.
Mm-hmm.
And then as you get closer to the payment, you update that number manually from the VAT return that's produced in Xero or QuickBooks or whatever.
That's exactly right, Simon.
Yeah, perfect. So I hope that answers your question, Ahmed, but if not, then obviously ask it again. Does it pick the bank balances from Xero stroke QuickBooks or from the bank account through open banking?
It's all from Xero, so that's why we're looking at the reconciled balance, because it's the balance that's in Xero that's picking up.
Brilliant. So to stop duplicating too much, can you do a budget in Float, export to Excel, and then import to Xero? So do it back the other way. So,
oh gosh.
And
would that be to create a P&L budget in Xero? Because I'm not sure that would, well, it doesn't feel like it. Again, it's this for the same reasons that I don't think it's the right thing to do it the other way, because of the timing differences and the VAT side of things. I don't think it would work maybe the other way.
Yeah. So what you've got mentally, you've got a P&L budget in Xero, but you've got a cash flow forecast in Float, and the two separate things. Now, just while I'm touching on that, there was a question that I was intrigued. So when we supply projections to a bank, when we're asking for, obviously we have to do a P&L, a cash flow forecast, and a projected balance sheet normally. If we was using Float, there's no magic button in Float that enables us to produce all of that from Float. It would be a P&L budget from Xero, a Float, and a cash flow forecast from Float. Float doesn't do a projected balance sheet based off the data that it's put in.
It doesn't, I'm afraid, no. But I think, to be honest, a lot of the banks is cash flow is the thing that they're all asking for just now. Certainly, the conversations I've been speaking to a few banks, just because I'm interested in what they're looking for and whether Float's able to help, and actually is all about cash flow projections that they're looking for. So I think it's almost while the traditional way that as accountants we would normally do a three-way forecast with P&L, balance sheet, cash flow, and sort of setting that out, I think the banks are much more interested in what are the ups and downs each month rather than what does this look like in 3 years' time.
Okay, brilliant, thank you. And Gordon, just be clear, unreconciled items in the bank feed are not pulled into Float.
That's right. So if an invoice has been paid but it's not reconciled, it's going to show still due in Float because it doesn't know that it's already been paid.
Brilliant, thank you. So Gordon just said thank you very much, getting lots of thank you. We've got 2 minutes left. So we've got all the F's, Jen. So we've got obviously Float, Fluidly, Frutily, and all the rest of it. Without, and obviously I know you're not going to dish the competition because it's not polite and nobody ever does, etc., etc. But where do you see your advantages are? So how do you position yourself against those three? Do you have any unique features that they don't don't have? How would you summarize that up?
I think, to be honest, and this is probably more my personal point of view as well, it's the fact that this is so much more usable for business owners. This is something that we're trying to encourage business owners to use, and I think this has really come into play now as we're seeing accountants bring on their whole client base. It's impossible for an accountant to keep all of those cash flows up to date and for them to be meaningful sort of on an ongoing basis. So I think for me it's about the fact that we've built this product for business owners. It's intuitive, it's usable, and really been able to sort of push some of that onto the clients, I think is where we sort of set ourselves apart from some of the competition.
Brilliant, thank you. So that's bang on 10:30. So I'm just going to flip down these questions just to make sure. So we've answered that and nothing on the books. We answered that. But basically, that question I thought was a really good. So if business drops off a cliff, as it did for lots on the 19th or the 12th of March or whenever it was, we can either put it in the actual figure, or we can just do a what if analysis.
Yeah, do a scenario, absolutely,
and see how they work.
And the scenarios, is one of the other things that sets us apart from the competition as well. It's been able to do those scenarios and see at a glance, sort of comparing different things. I think it's a key feature for us as well.
Brilliant, thank you. How long does it take? We've answered that. Integrated forecast. Can you compare safe forecast against actuals, which you've already
Yep.
shared? So I believe we've gone through all those questions. We've gone through the 17 that came through on the Q&A, plus the ones that came through on the chat. So I believe we've answered everything that everybody has asked. If anybody is watching, thank you, Jen. Anybody's watching that has any further questions, then the email address is in the chat box. So it is jen@floatapp.com. And as I said earlier, if you want to take it further and have conversations with them and see how it works, then please do. Getting lots of thank yous. You're welcome, Jeff. Thank you, Kim. So it just leaves me to say a massive thank you to you, Jen, for coming along.
Brilliant.
And
thanks so much for having me.
and for sharing in a real world example. So as I said, instead of it just being a glossy sales process, for want of a better phrase, I think it's a wonderful testament to the culture of the organization, and I just think it's fantastic. So it's brilliant. So
Awesome.
so thank you very much, Jen. Thank you very much for everybody that's come along. There will be a recording as and when the technology allows me to do it. So thank you very much.
Brilliant.
And
Thanks, everyone.
thank you, Jen. See you all soon. Thank you.
Thanks.
Bye-bye.
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 Bye.